Welcome back to Sustainable Views, the podcast where we discuss all things sustainability and their impacts on business. Today I'm going to be speaking to Fiona and Florence, two of our Sustainable Views reporters, about financial flows and how much money is actually flowing into sustainable funds and exactly the amount of financing that is needed if the world is going to meet net zero emissions as agreed under the Paris Agreement by around 2050. Hi both.
Hi.
Hi.
So Fiona, you've just written a piece about sustainable funds, and perhaps you can walk us through a little bit about what we've been seeing in terms of trends in the world of sustainable finance.
Yeah, definitely. 2025, I think it's fair to say, it was quite a tough year for sustainable funds. We saw $84 billion flow out of sustainable funds. That was a first for the European market as well, which is like the biggest market in terms of number of funds and assets. And so to give listeners a rough idea, in 2024, there were $38 billion of inflows. And at their very peak in 2021, there was more than $600 billion of dollars flowing into these funds. So yeah, there's been a sharp decline, I think, since 2022. And then that's kind of been steadily ongoing 2023, 2024, we still saw inflows, but 2025 was the first year of outflows for global markets. As I said, Europe had only seen inflows up until last year. It's a very different story for US funds, which are into their fourth year of outflows. But the data is out for the first quarter of this year, and it's looking a bit more positive, I guess, for the European market at least. It's seen just over $9 billion dollars of inflows. But yeah, the trend for the US, as I said, and also the rest of the world is still negative for now.
And what's been causing this? I mean, you said in the US the outflows have been for the last 4 years, so I presume it's not just the Trump effect. There are other factors behind it as to why we're seeing this negative trend.
Yeah, definitely. There are lots of factors behind it. Of course, global markets on the whole have been pretty rocked by the ongoing geopolitical tensions. There are obviously the strong kind of anti-ESG sentiment in the US pre-Trump and post-Trump has definitely not helped. Then there's ongoing regulatory volatility in the EU, and these funds have also seen kind of mixed performance. So all of that, I think, has kind of combined to, impact investor appetite for these funds. But there is kind of more than meets the eye with this kind of story of outflows for 2025. So Morningstar does an excellent job of kind of tracking all of these funds and looking at trends. And so they track publicly listed funds, but they told me that the outflows in 2025, that could also be money moving out of public sustainable funds into privately managed mandates that could also be sustainable. They're not sure. So, for example, their analysis did find that a lot of the outflows in the second half of last year were triggered by large UK institutional investors in particular, shifting assets to kind of bespoke sustainable accounts so that they have more control over how their money is invested. And some analysts have also told me there's been a kind of renewed investor focus on financial materiality. He was saying that, back in the kind of early 2020s and at their peak, these funds, they were sold on the basis that there would be like an extra level of due diligence for investors. And there was almost an implication of outperformance because, yeah, some of the sectors they were investing in were doing very well. That narrative has definitely shifted, I think, in recent years.
So things are perhaps not as bad as they seem. And so what you're suggesting is that some of that we basically can't track where all this money has gone to. So some of it still might be sustainable, but we just don't know where it's gone. You mentioned regulatory volatility in the EU. Could you be a bit more specific just for listeners in terms of what you're referring to there and why it's causing issues?
Yeah, absolutely. So the EU has this framework called the Sustainable Finance Disclosure Regulation. It's in the process of being simplified and kind of improved, I guess, with the aim of reducing greenwashing across the market. I should say this review was announced before the kind of current simplification agenda. Obviously, it will kind of feed into the review of SFDR, but yeah, it was announced at the very start of 2023, I think, so a little while ago. So the new rules, they should be coming into force in a couple of years' time. And so yeah, this kind of ongoing regulatory volatility is never helpful for companies or investors. But this overhaul is pretty major, and so there is a risk that the revisions might trigger more outflows. like I said, the EU is looking to introduce, much stricter minimum standards for these funds, which, on one hand is a good thing. But analysts are predicting that the number of EU funds categorized as sustainability related, they're going to be significantly lower once these changes come in. So there's currently more than $7 trillion in Article 8 and Article 9 SFDR funds. I was speaking to Allianz Global Investors, who were saying that the revisions may mean that only a kind of small portion of these assets remain in scope. Obviously, that remains to be seen, but yeah, it's possible. And that would kind of then call into question, obviously, to what extent, the framework is actually supporting positive real world impact if the pool of assets is too small. So, yeah, they've kind of been saying that the EU needs to strike a careful balance between having a framework that both supports a green economy and is seen as a gold standard for sustainable investing. The EU has been seen as a leader on this, of course, but it also needs to be realistic and pragmatic for investments. So I think we're in a bit of a wait and see approach. I think investors are unsure about the magnitude of reclassifications we'll see for these funds. But yeah, we'll be, you and I think we'll be keeping an eye on this very closely and see where the revisions land in the summer. And hopefully we'll be able to share some more on this.
Indeed, we can report back later this year. And just to remind listeners, can you just give a quick overview of what Article 8 and Article 9 funds are?
Yes. So Article 8 funds, Article 8 and 9 funds are both viewed as sustainable funds. Article 8 is a bit softer. It's kind of known as lighter green, and Article 9 is known as darker green because, yeah, their investments are more sustainable.
Indeed, and then there's always the question as to where defence fits into these
Yes.
funds, but that's a discussion for another time. And just to finish with you for the moment, you mentioned that there was some sort of signs that this could be turning and there could be a bit of positive news out there, but you also suggested, we need to wait and see what happens with the SFDR review. From the people you spoke to, is there a reason sort of why they see this kind of more positivity, especially given the fact that, geopolitically we're probably in a bigger mess than we've been for quite a while, and there seems to be no sign of stabilization there?
Yeah, I think so. I mean, one factor is definitely performance. Sustainable funds outperformed traditional funds in the first half of 2025, and they were kind of narrowly trailing them in the second half of last year. So performance has been good. And I think, based on what one analyst I spoke to was saying, despite this and despite the fact that, renewables have been beating fossil fuels for the past 12 months, it's not yet reflected in fund flows. So he kind of told me that within investor psychology, so back when there was a period of underperformance, some investors were burnt pretty bad by that. They suffered several years of underperformance. So it can take some time for people to buy back into the story. But investors are telling me that there's still really good appetite. One in particular was saying from European and APAC institutional clients, they're still kind of asking for the integration of sustainability criteria into their mandates. So yeah, definitely positive signals, I'd say, not just a story of negativity.
Well, we'll take any positive signals we can take at the moment, I think. So that's a little bit of good news. Flo, I wanted to turn to you now. So Fiona's mentioned this need to fund a green economy. With the closure of the Strait of Hormuz and the current energy crisis, there's been a lot of discussion about renewables being cheaper than fossil fuels. We've seen certain countries putting forward transition plans which increases financing into renewables. And you recently covered the International Energy Agency's latest World Energy Investment Report. And so could you tell us a little bit what it showed in terms of investment in the transition? Obviously, this was sort of written before the current energy crisis, but still what was being seen. And yeah, whether the requisite amounts are starting to move towards clean energy, or we're still seeing a lot of money going into fossil fuels.
Mm, absolutely. So, yes, as you say, in recent months, there's been a lot of positivity around investment into clean energy, and the data from the IEA does largely confirm that. The report predicts that in 2026, we'll see around 2.2 trillion invested in renewables, nuclear grids, storage, low emission fuels, efficiency, and electrification. So, kind of the whole clean energy ecosystem. and that's compared to 1.2 trillion in oil, natural gas, and coal. So clean energy is definitely beating fossil fuels on investment, but that's not to say that people are no longer investing in fossil fuels. Much of this is being driven by the electrification of the economy, according to the IEA. So things like transport, heating, and to a certain extent, industry and business. Electricity related spending makes up around 60% of all global energy investment, with electricity supply and infrastructure spending expected to reach 1.6 trillion in 2026, an increase to 2 trillion when end use is included. So that's things like EVs themselves, heat pumps. So that's really been kind of a main driver of this look at renewables and financial flows into renewables. But yeah, as I mentioned, it's not a solely positive picture. You alluded to the ongoing conflict in the Middle East, which is driving up oil and gas prices, which has actually seen investment into coal, which is the most polluting of fossil fuels, of course, set to rise to 108 billion this year, which would be up 4% on 2025 levels and shockingly the highest amount since 2012. So that's really coming out of principally Asian economies, which are looking to kind of secure more of their energy from domestic sources in light of the kind of supply issues around oil and gas. Similarly, natural gas investments expected to reach a 10-year high this year, and that will be up to 330 billion according to the IEA figures. So it's a bit of a mixed picture, I would say. Definitely lots of investment heading to renewables, but fossil fuels are still getting their kind of investment in certain corners. I think interestingly, linking back to what Fiona was saying, we are seeing a slight shift where renewables investment is perhaps moving away from these pure play kind of sustainable funds and are, as much as they're still included in those funds, some investors are just seeing it as a sound investment. I mean, we're seeing record levels and they kind of want a bit of the story there. So yeah, it's kind of a shifting landscape on that point.
Great. And yeah, I mean, you mentioned the current crisis. I mean, as we're recording this today, there's been a deal supposedly between the US and Iran. Let's see if that holds. And I think gas prices have dropped by about a third or something since that was announced. Um, from what the IEA and other experts you've spoken to have said, do they expect whatever happens sort of geopolitically, this investment into clean tech to continue for, as you've suggested, security reasons or just basically on economics? Or if the price of gas, dips again and the world calms a little bit, so there's perhaps less need to have, sovereign, local, domestic energy sources, do they expect this to change? Where do we see the trends going?
Yeah, I think most people I speak to, especially in Europe, are kind of looking at this as more of a permanent switch. And I think you're very right to kind of identify security as a huge part of that. People in Europe have been burned twice now after the Russia's invasion of Ukraine in 2022 and the gas crisis then. And obviously now there is kind of an ongoing concern about the need for domestic, ideally, but kind of secure supply of energy. We also have the influence of something called positive tipping points. This is an idea that lots of climate people talk about, but Tim Lenton at Exeter Uni is kind of the authority on this, and that's the idea that once you have sufficient adoption of a certain climate tech, it then becomes far easier for it to accelerate. So for something like electric vehicles, the Exeter academics have said that once it costs the same for someone to buy an EV as it does a conventional fossil fuel car, then it will kind of massively increase the uptake because they're cheaper to charge, and the charging will become more widely available. So they say that in kind of the clean power space that we're talking about, lots of these tipping points have been crossed, especially in kind of European countries or countries with very high amounts of solar. And that means that, as you said at the top of the episode, we're looking at a place where it's cheaper to access renewables, and this is played out in the kind of renewables build out. Some figures from a different think tank, Ember, published in April, show that solar met 75% of global electricity demand growth in 2025, and when paired with wind, they both met 99%. So that kind of additional growth bit is largely being met by renewables. But it's definitely worth mentioning that politics and policy have a huge impact on these kind of positive tipping points. So things like subsidies or general messaging. And we're seeing kind of varying approaches around the world. Of course, in the US, we've got an administration that's actively hostile towards renewables, and most notably offshore wind, where some companies have been required to kind of relinquish their leases. That's, of course, going to affect the kind of economic case for those renewables. And the other thing is kind of this issue of geopolitical instability. The emphasis really is on kind of domestic and secure. So in countries that have coal, they're probably looking to develop that coal unless they've made a very clear stance not to. For example, we're speaking from London. In the UK, the government has said we're having no new coal. But for lots of economies, largely developing ones, this push for secure energy will ultimately mean coal.
Yeah, interesting. Lots of very interesting points there. Yeah, I mean the tipping points is super interesting as to when that actually happens. I think also what you said about the need for policy as well. I mean, we've covered on sustainable views today a report from Columbia University, which is very clear that sustainable finance on its own can't kind of push the transition, that it can go so far, but it needs that enabling environment. It needs the policy in place to make projects financeable. And I think also what you've just mentioned in terms of coal as well. I wrote in one of the newsletters last week. There's another report by Ember which looked at Asia last week, and this idea that yes, it's a mixed picture, but in lots of Asian countries now, they are getting to, I don't know whether they call it a tipping point, but clearly clean energy is leading the way rather than coal, again because of economics, and that there's this move. So there's definitely, it's a much more of a mixed picture, I think, than perhaps what we're reading in certain publications or seeing in certain places, where we sort of get the idea that since Donald Trump has been back for a second term, the whole world is kind of pushing back against clean energy and sustainability, whereas actually perhaps the opposite is now even happening, and it'll be interesting to see what happens going forward. And Fiona, I wanted to ask you a similar question to I asked Flo. Depending whatever happens with geopolitics, do you see more finance, more flows going into sustainable funds just because it sort of now is starting to make economic sense?
I think it's a possibility. I think this SFDR question is really, going to affect that. So yeah, maybe too soon to say. But what I will say is that some of the big European investors that I've been speaking to, they do really see a lot of opportunity here. I interviewed Amundi not too long ago, the Europe's biggest asset manager, and they were kind of saying that this energy crisis that we're currently in is largely going to be solved thanks to clean energy capacity. And they were saying there's strong tailwind behind, the energy transition. They were also predicting that there will be a push from policymakers to kind of, obviously we're seeing that from the EU at the moment, secure Europe's energy supply, which, could also support the renewables industry and companies involved in the electricity grid build out. Another point to mention, which we haven't touched on, is AI. The story around AI at the moment is focused, I think, or the climate story at least, energy intensive, the water usage. But one big European investor I was speaking to last week, they're predicting that the energy demands from data centers, they will also be a good opportunity and another reason to start investing more in clean tech, because, fossil fuels aren't going to cut it, I don't think.
Yeah, no, lots of interesting things there. I wanted to pick up just first on the point you made about SFDR, and I think in your piece that you wrote about financial flows, um, you quoted somebody, and I can't remember who it was now, but saying basically what happens in the EU tends to spread or impact the rest of the world. So does that happen in both a positive and a negative way? I mean, in your piece, you sort of suggested this was positive if there were positive flows in the EU. If the SFDR has a big impact on sustainable flows, could it then have a negative impact globally?
It's hard to say. I mean, what I will say is we don't have many SFDR equivalents going on at the moment. So, I guess we couldn't do this podcast without touching on the UK SDR, which, I think there are around 150, maybe a few more funds, SDR funds at the moment. Not very many, let's say. Australia was also looking to kind of copy, I guess, the EU's framework or do their own sustainable fund framework. That's in the works at the moment. So, SFDR is one of the only types of sustainable finance frameworks we have at the moment. And so I think, yes, the EU has always kind of, I mean, it's set the example on a lot of sustainability and climate policy, not just sustainable funds. But I think, the fund flows where, the most sustainable funds are obviously in the European market. It does set the tone for the rest of the world.
Indeed, yeah. And I think also a point that you've both made, which is probably important to pull out also, is that it's not just financial flows into EVs or renewables. There's also this infrastructure around it, the electrification, the grid, which is less exciting for an investor to fund than a big wind farm or something potentially. So that's another thing to look out for. And obviously, as you quite rightly said, Fiona, that we need to talk about AI and data centers. I was at an event recently again where there was this idea that AI and data centers could be good in the sense that some of the hyperscalers could actually decide to invest massively in renewables and really push the transition because they need the energy for their data centers. The researcher presenting there was sort of suggesting there were two sets of hyperscalers. There were those ones that were moving perhaps a slightly cleaner direction than others. But yeah, that remains to be seen. Thank you very much, both of you. That was a super interesting discussion, and I think plenty of things that we'll be picking up on in the coming weeks and months. And thanks to our listeners for joining the podcast and tuning in to us. If you want to listen to more of our podcasts or to read our journalism, go to sustainableviews.com.